Welcome back, YouTube. So in today's video, we have a lot to get into, so I'm going to just jump right in. If you're looking at the screen right now, you're going to see reports of everything. If you just go to Google and type in Federal Reserve, you're going to see all these reports about the inflation numbers and how this is the worst thing that ever happened in the last 39 years. And pretty much the reason why Jerome was tap dancing around a lot of these questions, asking about what exactly the federal rate hikes are going to be, how much tightening is there going to be, like how aggressive, how hawkish are they going to be? And he pretty much was saying that they don't know, and we'll talk again in March, like right before they're expected to have some concrete numbers on this. And then the numbers come out. And matter of fact, he did say that he does believe that the numbers for January are in fact worse than December. And he did see that the numbers are going to be, depending on like how the next few months go, but based off of the last year, if that's any indicator, things are in fact going to get worse. And now you can also see here that Bank of America said they believe that they're going to be 7 rate hikes. So it's pretty much believed across the board, at least federally and institutionally, that the inflation is out of control, and there are going to have to be massive restrictions in order to get it down. Otherwise, we're going to be headed toward the R word, which is recession. Now, when you talk about tightening of money and looking at the charts here, what does that mean overall for stocks and for crypto? Well, technically means that's pretty much like a market reset, especially if we go into like a recession. There's definitely going to be a market reset, but you'll see a lot of money get moved around, and a lot of riskier assets will tend to either decline or at least cease to exist. And some of the ones that are believed more stable or that they're more bullish on, you'll see them take longer positions in there. And that's after they extract the money and wait for what you would call like a bottom number or a bottom indicator before they rush back into the market. With this video, I was comparing charts, and I got seen some key indicators that kind of implied that we're going to have more to come. Now, if this is just looking at the Federal Reserve here and these numbers coming out, obviously they're going to be forced to raise rates. And if this is still going on through February and in March, then they're going to have no choice but to be more aggressive, because that'll be 2 years of massive inflation. And once we start getting, up around like that 10%, then, obviously that we're just on a downward scale from there. We're definitely going into a recession. And I don't believe that they want that to happen, but they were a little more careful with their words this week, just to not send the market in a full panic. But we did see a decline, like in the SPY, as Jerome was talking, and when he pretty much said that inflation is going to, but has been worse. And we also saw today, like on the Apple call, saying that even Apple said that. Jerome said it on his meeting as well. He said that he believes supply chain restrictions are going to go into 2023. And Apple came out and, despite having a major successful quarter, Apple in fact came out and said that they also expect there to be supply chain restrictions into 2023 as well. So we have 2 major factors here. Well, really a major factor here that has to deal with inflation that they don't even expect to be resolved this year. So this is going to trickle over into the prices as well. But when we factor in inflation and the need to get it under control, we have to look at the charts here and kind of see, okay, well, what indicators are we getting? What can we expect? Besides from the obvious, as far as for there being rate hikes, how serious is this going to be? What can we expect? And I'm going to look at 2 charts here first, and then we're going to take a look at Dogecoin as well. So we're going to take a look here. I'm going to bring this over to where you are, just so you can see everything. Because I have, we're going to take a look here at the SPY first. I think that's going to be more important. So let me just switch over. And boom. Okay. So what we can expect here, and if you can make sure the lines are up so everybody can see. Okay, perfect. Okay, so what we can expect here is, if we look back over like the last, let's say 3 years, and what we see here is 2 major dips here, where this is one back in 2018, when they said that they were going to do 3 rate hikes, and they kind of didn't want the market to crash, so they kind of backpedaled off of that and said we're going to do 2. And obviously they kept injecting money, and the market rallied from there. And then of course we have the pandemic crash as well. But what we saw prior to those major dips downs, what we saw here, and if you look at these lines, the yellow line is the 21-day moving average, and the blue line is the 50-day moving average. And what we have here prior to each of those dips, like so during each of those dips or prior to each of those dips, you'll see that the heart of it was when these lines would cross the 21-day and the 50-day. And we see this, let me make sure I indicate the crosses here, like literally right above that highway to hell, we'll see this cross. Now, this is something we're going to have to monitor, because if you look up here, what do you see here on the 21-day? You see that sharp bend. This is the sharp bend. And we know that there are more negative catalysts to come. We know that there are more negative catalysts to come. This is an indicator. We have to look at this. Pretty much when you say buy the dip and the dip keeps dipping, this is an indicator that that we pretty much are in position here. We're positioning ourselves here to have a much further sell-off in the market. Now, if that's not enough for you, let's go ahead and confirm this elsewhere. Let's look at BTC, because I got to go to crypto first. And if we look at Bitcoin here, we'll say, okay, what are the patterns that we have here? And Bitcoin is getting a bounce as I expected it to. We had the rejection, but it is still on that trend. Trend what? Of that higher low each time. This is pretty much the fourth time that we're going to stay. It's looking like it's forming up. You'll look at the short term or on the weekly and be like, oh my God, it's rallying, and all of the fear and the catalyst for the Feds and stuff, it's all baked in. Not necessarily. You zoom out here and you'll see that this rally here is like right on time. We have our peak here at around 68, 69,000. Then we come down, boom, higher low, down, boom, excuse me, lower high, higher low, excuse me, boom, rally up, down, down. And here we go, looking to repeat again. We will know for sure once we get around the 21-day moving average. Because technically speaking, we typically will come up. We rallied above it like briefly around like December 25th or like around Christmas. But technically speaking, on these rallies, we'll normally come up and kiss the 21-day moving average, and then we start our descend. So we will see here relatively probably within the next week or so if we're going to continue this pattern here. But this here, until we get a new trend, and technically we're not breaking out of this trend here until around, even like the lower levels now is around like 41, 42,000. So until then, it's safe to say that we are in this trend until we break and form a new one. We do have some support here roughly at around 30,000, but it's looking like we're still in that downward trend in Bitcoin, which is what? That is an indicator that we are still technically going to see some of that negative pressure here in the crypto market as well. And again, this is primarily because we're going to see a lot of money flooding out of crypto to rebalance for these interest rate hikes. And I think that what Powell was trying to do was buy some time, because you can pretty much have a form of stabilization in the market. And that's pretty much what Jerome was doing, in my opinion, because I do believe that they have discussed at least at the bare minimum, at least a range for potential interest rates. But he was saying that, oh, we don't know yet. We haven't discussed it. And that's pretty much just leaving like this cloud overall over the market as far as for institutions, people saying, okay, well, we're in the green. Do we need to take profits and wait for the bottom for this? Or can we stay in? Are they going to kind of do some more tapering? Are they going to extend this out and kind of wean us off of this, this stimulus steroid package for the market more slowly? Can we leave the profits in? And it's kind of like leaving this little gray area over over the market. So what we can have here, and I believe we'll have some spikes again around like child tax credit, income tax coming back. Another big thing will be the people that sold off in December for tax loss harvesting. That 30-day window, the wash roll is coming up. So I do believe that we can see an injection from that. But the fact remains, until we break trend, we can expect more of what we've been getting. And we've seen the numbers here with Bitcoin, with Doge. Doge is doing very well. We're going to take a look at Doge here. Doge is that 12 cents resistance line is holding up very well. And normally with Doge, it takes a lot for it to break its resistance line, including like the 12 and the 16. Those Doge's resistance levels are not easily broken. So I do believe that even if we were to go down and test some of those lower levels, we would need absolute confirmation by the feds or something like that, and saying that, okay, well, there's going to be a mass extraction from the market in order for Doge to break through that 12. So even with these catalysts and these trends kind of persisting, I do believe that for now, the worst that would happen is we would go down and bounce around on that 12 cents level here. But Doge is doing fine as well. We have roughly like 2 tests up here around like that 21. Obviously, shorts come in, and then we're holding right now at around that 14. And we're going to see, because technically the last 2 times we've ran up to our 50-day moving average. So we'll see if we'll get another rally out of Doge. That would put us roughly at around 16 cents if this trend continues. So that'll be another indicator for us to look at. But again, as I said, I do not expect Doge to break out of this trend. At best, I believe we'll come up and test it until we get some concrete information from the actual Fed. So with that, when it comes down to like buying the dip, I do believe that we're going to have an opportunity if the Fed doesn't change their mind, especially between now and then. I do believe that we're going to continue to have this opportunity here to average down and take advantage of these prices, and also with the potential for them to even dip even further, depending on the aggressiveness of this interest spike, whether that's 0.25% or 0.5%. So as of right now, what I'm doing is obviously just making sure I have a cash available and being very fluid, so that if we do get these breakdowns, we're able to be more aggressive here and take advantage of these positions and increase coin count, increase share count. Apple is an absolute monster. And this is one of the examples that I use, saying that no matter what happens in the short term, as long as your coin, your stock has leadership, utility, competitive advantage, and vision, they will survive and they will go on. After the bear market, a bull market will resume. So this is the opportunity here to take advantage of these prices. Let me know what are your plans of action for these prices in the comment section. If you found value in this video, like it and subscribe to the channel if you have not, if you want to hear more from me. And don't forget about BlockFi. If you open an account with them, you can get up to $250 in some of your favorite crypto, including Bitcoin and Ethereum. I appreciate all of you. Thank you. And until next time.